David, I'm going to kick it off with you because there's no doubt that Facebook's entrance into finance over the past few months has elevated this conversation, the announcement of Libra and the Calibra digital wallet. Talk about exactly why and the advantages of big tech bringing to the financial scene. Set the stage for us here.
So I think it's important to talk about the problems that so many people are faced with today within the current constraints of the existing system. 1.7 billion people still don't have access to digital money. Sending money across borders still costs on average 7%. Even domestic payments are not really efficient and cost a lot of money. And I like to make the parallel of what happened to the telecom industry in terms of services that benefited people pre and post-internet. And pre-internet, we were in a world where we used to pay up to $1 a minute for an international call and 15 or 20 cents per text message. And suddenly with the internet, we can now communicate for free with a $30 Android device. And when you think about money, it hasn't really evolved the same way, and the same person with a $30 Android device doesn't have access to digital money at all. If anything, the poorer you are, the more you're paying for financial services. And as a result, we believe that we can help advance the conversation at the very least on what can we collectively do to improve this situation, to improve this system, which at its core, if you look at systems like SWIFT or ACH in the US, et cetera, haven't evolved in the last 50 years.
Concentrated industries.
So Governor Carney, the question to you then, from a public policy perspective, do tech companies need to abide by the same rules that banks abide by, or should there be an entirely new set of rules here?
Unlike the question you asked, Jason, that's simple. The answer is yes. Same risks, same rules. And one of the important things when we get into payments, for example, is, and what we're realizing as regulators is that we need to look at the ecosystem as a whole. So not just a narrowly defined slice of the payment system, because it is, in many respects, all interconnected. And if there is a new form of payments architecture that develops that could be systemic, then it's not just certain elements of it can fall under specific regulatory approaches which are not best suited for regulation of the entire system.
Approach this sector.
Governor Carney, what are some of those impacts on the global financial system that you're considering?
Well, so if this is successful, or something like it is successful, it becomes systemic. So it is integral to the system. It's integral to people's everyday lives, and it's and is part of the core architect, would be part of the core architecture of the system. So that in and of itself means that it has to be always on, 24/7 operational resilience, the kind of things people would expect. Secondly, there are a series of, I'll put it, financial or treasury-related issues around a stablecoin structure. So how is the stablecoin backed? What I've exchanged my my fiat money for the stablecoin, what's the backing asset? Do I have an underlying claim to that backing asset? So is it backed in concept or is it backed in fact? What happens if the stablecoin, if it's a basket of underlying currencies, what happens if that basket is rebalanced, and what happens to the prospect of it potentially being rebalanced to the stability of the system? How are the revenues generated? I mean, these are all questions that Libra and others are trying to work through or looking to work through, but how do the revenues cover the costs of the system? And then in terms of the actual everyday functioning of the system, how is the KYC questions and all the associated AML, anti-money laundering, counterterrorism financing issues addressed? Do you just know the individual when they enter? Can they be tracked on a wallet-to-wallet if it's exchanged on, between wallets by different providers? How does that knowledge? On one level, you want that knowledge. Certain authorities want that knowledge. On another level, from a privacy perspective, there are limitations on the provision of that. I mean, there's a host of of very large issues that need to be resolved.
You mentioned the speed of cross-border payments and the opaqueness of that process, and I guess it's also error-prone to some extent with SWIFT. Santander seems to be trying to approach it with a partnership with Ripple. Just curious what your thoughts are on that.
So I do think that of the use cases out there, cross-border is one of the most compelling. We know that intermediation chains cross-border are long and quite opaque, and they're slow, and they can be quite costly. So my sense is that technology with the appropriate safeguards could make a material impact and likely will. And it may well be through a partnership model. I don't want to pronounce on any particular approach, but there are a variety of partnerships out there that are trying to innovate and to reduce frictions and increase transparency for those cross-border transactions. In my sense, I'm fairly optimistic that there are some good solutions out there that don't necessitate a global stablecoin.
But it could be something that has a lot of social value.
Just to point very quickly, I think this cross-border aspect of Libra is, if it works, the core unique selling point, and it's a big deal. And that comes out, you said, so because cross-border payments is an unspeakable mess, particularly for small transactors. The second point is I did see the PBOC at some length.
One technology innovation that's getting a lot of headlines is Libra. Do you have an opinion on Libra? Sustainable, not sustainable, real, not real?
It was a neat idea that will never happen. Right? And I have nothing else to say about it. And we already have stable coins, so they're not the first to do that.
So you have a JP Morgan stable coin?
We have a JP Morgan stable coin called JP Morgan Coin. It's backed by $1, so it's really stable, and
In the last few months of my term, I started spending a lot of time thinking about central bank digital currency. Now, not being a central banker, but being a market regulator, I thought about what would be, in a sense, the most direct method to get there. And it struck me, and this is something I think you said, Charlotte, it's not about reinventing everything. It's actually utilizing existing trusted providers like yours and others, but giving them a standard set of technological protocols to use. So in short, our proposal, I think, is a quite simple one. And that is that there be an independent enterprise. Now, it can be a quasi-governmental. There's certainly a role for strict standards and government role in this. But having been in the government, knowing how difficult it is to actually do technological innovation in government, being a representative of government that couldn't build a medical website, and after 3 tries eventually went to the private sector to get it done. This has really got to be built, if it's going to be built on time and built, it's got to be built with private sector involvement. But that entity would make those standard protocols available to the entire existing financial ecosystem, to banks, payment providers, and others, standard set of protocols. And it would not be in the business of collecting data. It would be in the business of developing technology only. The relationships that people would have with their providers would be their existing relationships today, but who knows what new entrants to come. And it would work through the existing regulated system, so bank-regulated enterprises, other regulated enterprises. So a very simple, really a very simple concept to create a digital version of the dollar. And why does this matter? I believe it matters because I believe the reserve currency, the primary reserve currency status of the dollar is very important to the American people, but I think it's important to people the world around. And the battle is being fought today in East Africa and West Africa and Southeast Asia for that convenience factor, for that utilization of the dollar as a reserve currency. And I think it matters that we develop a digital dollar so that the dollar continues that reserve currency for decades to come. So looking forward, and I look forward to input into our proposal. We're going to have more to say about it with weeks to come. I was joined in developing it with the CFTC's Chief Innovation Officer, Dan Gorfine, And we look forward to developing this, look forward to engaging in a dialogue with folks.
Let's first examine what you guys all think of the future of money, what it might look like, and what that means to you. And actually, Kirsten, if you don't mind, I'd like to start with you and get your thoughts from DNB's perspective.
Absolutely, and thank you, first of all, for putting such a fascinating topic on the agenda. As you're saying, I mean, this is increasingly taking up space in newspapers and all other areas. Sometimes I kind of get the feeling that the debate on the future of money is very much focused on what technology is available and what can actually the technology enable us to do. And I think it's useful to go back to the source of which should be the source of every innovation, and actually ask ourselves what is the real problems that we are trying to fix.
Sure.
And these have a multitude of varieties. I mean, it's about the cumbersomeness, the inefficiency, and the cost of dealing with cash in our everyday lives while buying something at the market, whether it's online. It's about global cross-country transfers, which is definitely, in addition to being inefficient and costly, very complex. And thirdly, another point is in the areas that lack the financial infrastructure, how can they get accessibility to a currency which is stable. And I think the solutions and what we were looking for will vary depending on what the problem is. And sometimes it is about the future of money as we know it, and sometimes it's about increasing the efficiency in the payments value chain. That can also be a solution. And just to share a few experiences from Norway and the Nordic region, which has very much gone cashless. And we took the initiative 4 or 5 years ago to build a wallet that very quickly grew traction, where we invited the other banks in the market to co-own it together with us. And within the space of 12 to 18 months, we have more than 70% of the Norwegians actually using that for peer-to-peer payments. This wasn't the big transfers, but sending money to friends, sharing the bill when you're going on a trip, and that kind of thing. Quickly also we were part of top 10 in App Store. I mean, it doesn't happen often for a country with 5 million people, but it got a lot of traction, and the result of it is that less than 5% of transactions in Norway is actually settled by cash. And I guess the key learning I would like to share is also that when the innovation is good enough, it has to be simpler, it has to be accessible, then the behavior will change very quickly. So I think what we're looking for in money too, solution can be different depending on what the problem is. For the Nordics, it's really solving the lack of cash. How do we have a backup plan if connectivity is gone? How do we then have a digital alternative, since cash is not there any longer? You don't have to go far, but if you go to German-speaking Europe or Japan, what you need to solve is more an over-reliance of cash and so forth. So the solutions will actually depend on what the problem is. There is a lot of innovation going on in terms of cryptocurrencies, but I must admit that they are still relatively niche-oriented. It's a huge variety. But some of them, at least from my perspective, they more look like means of storing value rather than what we most often think about as a means of payment. And as you also touched upon, once you start looking into what can be currencies of global scale, if anything, that raises a lot of questions and issues where I really don't think we're close to having the answers. And you're very quickly into debates on financial stability, sovereignty, and the role of regulators and central banks. So not really giving an answer. I think it's hard to be very certain, but a higher diversity when it comes to what the future will bring, and definitely the current larger players' ability, I think, to address and spur innovation to solve the real problems. I think those will be key elements into deciding what will be the future of money.
We know that digital currencies are certainly top of mind these days, but before we go into that, I think it's interesting to take a step back and look at the underlying blockchain and distributed ledger technologies. So actually, I would pose this question to Charlotte. Would love your perspective on what the potential would be for blockchain and DLT to impact, payments market infrastructure, financial infrastructure, excuse me.
So let me, if you answer this in two ways, if I might. I mean, we do have a live in-market blockchain technology for larger transactions, larger corporate transactions. But I think the bigger question that a number of people in the panel have raised is this question of what does resilience mean in a digital world? It's worth remembering that forgery of banknotes was a capital offense until quite recently. And resilience, in a way, is the new version of that in the digital space. And it means different things. So for retail transactions, resilience means day in, day out, every second being up and ready to allow people to pay for coffee before the coffee gets cold. Bigger transactions, it may not be that absolute millisecond that's vital. It might be that it's the recording of the information that blockchain allows you to do. So I think we have to use the technology to have a proper debate about resilience and what that means. Absolutely. Because in a sense, that's the new frontier in the digital world. So for someone like us, being up in the millisecond, doing tens of thousands of transactions over the Christmas period as it comes up, delivering this sort of 6 nines infrastructure is vital for the kinds of transactions that we serve. But there will be others for where tokenization or the slithering of transactions becomes really important for a different use case. So I think blockchain opens up a debate about what does resilience and data integrity mean in the future. And you've got to pursue that debate as much as you have, again, the technology itself.
Absolutely. Thank you for that. I think it'd be great if we could turn to maybe...
There's another set of questions we're looking at more for the future, which is could we bring blockchain into some of the kinds of payment systems that we operate on a wholesale basis? For example, the large value transfer funds, and so we have we've had a series of research projects which have been controlled experiments basically, but experiments that work, basically, and show that yes, indeed, you can use blockchain to do large value transfers. You can use it to do that combined with delivery versus settlement over for securities transactions. And yes, you can also use it for cross-border transactions. But of course, a number of these things then I think raise a lot of other issues which have to do with, well, first of all, what would actually be the benefit of doing it? And then the second one is are there other constraints that prevent it being done efficiently? And particularly in the case of cross-border transactions, there are notoriously many barriers to transferring funds that make that whole aspect of payments both expensive, inefficient, and unreliable. And those don't only relate to technology. Technology and the lack of interoperability is part of the problem, but it's not the whole problem. And so that's something that I think we have to think about in the future.
You, Tim, since you mentioned it, the G7 working group did just issue a report on investigating the impact of global stablecoins. Is there any thoughts you'd be able to share with us?
Yes, and that does flow a bit from that, because certainly that is one of the aspects that the Libra project in particular was targeting, was trying to find a way of using technology to make cross-border payments seamless, and also to enable the people who were unbanked to have access to the financial system. Those are clearly genuine problems, and they're problems to which we don't yet have a solution through other means. At the same time, as the G7 report, which we participated in, highlighted, there are many issues that particular solution raises, and those would be issues with a number of other potential stablecoin solutions, and those relate to legal clarity, to safeguards against money laundering, to competition, to investor protection, and a number of different things that they raised. And then even beyond that, if these means of payment were to become widely used and global, then they would also raise issues having to do with the sovereignty of countries to establish their own currencies, and so those are issues that, of course, need to be addressed. But at the same time, and which of course there's work that's going to continue through the Financial Stability Board and other channels to come up with a more complete set of responses to that. But then at the same time, have to say that Facebook at the same time has identified a real problem, and if we don't like their solution, then it begs the question, well, like, where's ours? Where's ours in the official sector? What are we going to do to make the payments more efficient? And so this really, I think, is a rallying cry for the official sector to come up with better ways of making cross-border payments more available to the whole world's population.